Good evening and welcome back to Be Rich. Today I want to talk about what is happening in the markets. So far for the last 20 years, and most of you who are listening to this would have not known history before 20 years physically because you wouldn't have been present in the market. Because most of the people who watch my channel are between the age of 20 to 40. So 20 years back you would have been just 20 years old and the dot-com bubble would have burst. So you wouldn't have seen a different regime at all. What do I mean by a regime? Normally, a regime means a government which is sovereign and which dictates to you. But actually, in this case, the regime is a central banker. By controlling the amount of liquidity and the cost of money, the central banker determines what is the liquidity in the system. So, from 2002, there's been only one way of policy, even though several Federal Reserve chiefs have come and gone. There was Alan Greenspan, there was Ben Bernanke, there was Janet Yellen, and now there is Jerome Powell. So these four Federal Reserve chiefs have followed only one direction. They have always made sure liquidity is available freely at very low cost, and if the cost they feel is too high, they have resorted to quantitative easing, which is basically printing money and buying assets so that the asset price does not fall below a particular level. So this is like putting a floor on the price of assets and giving a safety net to investors. The first time this happened was in 2002 when Alan Greenspan cut interest rates to almost zero in response to the market crash. This was then called as the Alan Greenspan put. For people who are already in trading, you will know that put option is a condition where if you have owned the option, gives you the right to sell the stock at a particular price. It is not an obligation to sell, but a right to sell at a particular price called the strike price within a certain period called within the expiry period. So an option exists for a particular period and at a strike price. So what Alan Greenspan did is by cutting interest rates, increasing liquidity, and his follower Ben Bernanke getting into the market to buy not only government bonds, also buying mortgage bonds and corporate bonds. They put a floor on the level at which the market cannot go below. So basically, they were cheating. What they told is, in event of a recession or in event of a market collapse, the Federal Reserve would get into the market and print money and buy stocks, not stocks directly, buy mortgage bonds, buy corporate bonds, if required junk bonds, and of course government bonds. In Japan, it went to the level of buying stocks to keep it at a certain level. So basically you told the punters that we will not allow the market to fall below this point and therefore you can sell at this price. And the upside is unlimited because we'll keep giving you enough liquid on the punch bowl and you can have a party. This kind of punch bowl led to several excesses where companies which absolutely had no profit, no track record or no possibility of ever earning a profit starting to be created and traded privately in so-called private equity capital. This private equity capital was created by a set of partners who created funds in which wealthy individuals could invest. How did the Fed influence this? The Fed kept the rates artificially low and kept the asset prices high. So people, suppose I already had $100 million in assets, I could go to the bank and say, I'll give you $30 million of my asset as security. Give me $15 million because for sure Fed will make sure the value of my asset does not fall below 15 million. And since I'm giving you A-grade security, give me rates very low. People have known to get less than 1% per year. So that $15 million, I would give it to a private equity player who would play footsie and who will play rolling the dice in high-tech companies. And these people in turn, as the company grew, I could keep selling it to various private equity investors and the value of my stock kept growing. Initially, in the first round, several companies turned profitable, successful because they really filled a need of the market. PayPal, Facebook, are all examples of companies which were started with these kind of easy money and later became extremely profitable. But as the years go by, everybody knew that this game could be played, and the companies that came out were duds. Like Uber, in its entire private life as a private company or as a public company over 2 years, has never made a dime of profits and is definitely set to sink because there is no level of profitability. These were all created by the Alan Greenspan put. If there was no Greenspan put, you wouldn't have these fancy companies which were created out of thin air based on only Fed's liquidity. Now, why investors are upset and why there you see so much commentary that there is going to be a deep recession, please do not increase interest rates, this is because the Fed's put is now morphing into a Fed's call. The call, as people know who trade options know, is an exact opposite of the put. It gives you the right to buy a stock at a certain price. The Fed is now writing call options by doing quantitative tightening instead of quantitative easing. It's allowing its bond portfolio to run out and at the same time increasing the price of money. This means there is no floor, there is a cap on the upper side of how much the value of your asset can go. So you cannot make enormous profits, but there is no cap, no floor on the lower belt where a put can stop the price from falling further. So the Fed in matter of 6 months has completely reversed its position from writing a put to doing a call where the upside on all assets is capped, the downside is unlimited. This is why you see several startups are starved for cash. And if you have followed SoftBank recently, you will see a lot of top level exits. This is because they felt their projects were not being funded, nor were they creating pay. All this is a confusion caused by Jerome Powell, who's been forced to metamorphosize himself from writing puts to writing calls. Therefore, the Greenspan put, has become a Jerome Powell call. Whether it will become a Paul Volcker's call is something only time will tell us. Thank you for watching. Be rich. If you like this content, hit the subscribe button, turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.